On today's episode of the Cryptoverse. Day 1 of the G20 meeting is over. Mastercard say they're open to cryptocurrencies under certain circumstances. A strong argument has been put forward, debunking the myth that the MtGox bankruptcy attorney is holding down the Bitcoin price. President Trump signs an executive order making the Venezuelan Petro illegal in the United States. And a quick stop over at CoinMarketCap and the charts for the market roundup. So all of that on today's episode of the Cryptoverse, so stay right there. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. Let's get into the first story. So day 1 of the G20 meeting is now over. The meeting ended about an hour ago from when I'm recording this. And here is the G20 website, g20.org. They have a news section where they post press releases and blog posts and all this kind of stuff. So far, there are no press releases on the official G20 website. However, there are 2 recordings from the live stream press conference that they held at the end of the first day. So hopping over to their Twitter for a second here, the only thing with these recordings, one on Twitter, one on YouTube, is they're in spoken Spanish, which I personally cannot interpret. And because it was only streamed like an hour ago, there are no translations out yet that I can find anyway. So in the Cryptoverse video for today has to go out. It can't wait for this announcement. So I'm just going to have to publish it as it is. So hopping over to YouTube, if you happen to speak Spanish, I'll provide you with a link to this YouTube recording of the live stream press conference. Fast forwarded to 11 minutes and 30 seconds, which is when the feed actually goes live. And if you speak Spanish, perhaps you can interpret it. Moving on to story number 2, Mastercard are open to cryptocurrencies, but there is a catch. The catch is that they want to support cryptocurrencies that are issued by central banks. Right? They don't want any of this free money, and they don't want any of this private money. Definitely not private money. So you may remember recently that Mastercard reclassified purchases of cryptocurrencies as cash advances, meaning cryptocurrency exchanges then had to charge higher fees on those transactions, and the credit card issuer would begin immediately charging interest on those transactions because they were cash advances. Talk about souring the milk, hey? Well, in this article, I found a particular bit that I find interesting. It's in the section called The Catch. It says, Ari Sarker says that the company is very happy to consider helping the use of cryptocurrencies, but only as long as those virtual currencies are issued by central banks. He says, quote, if governments look to create national digital currencies, we'd be very happy to look at those in a more favorable way compared to existing cryptocurrencies. And then with regards to the private coins in the orange bit, he says, quote, so long as it's backed by a regulator and the value is not anonymous, it is meeting all the regulatory requirements. I think it would be of greater interest to us for us to explore. So it's no surprise that Mastercard would support a government-issued cryptocurrency because then they basically are facing a foe or a predator with no fangs. Right? If the Bitcoins of this world continue developing as free, open source, open networks, well then Mastercard is eventually facing the fate of the dodo. Story number 3, is the MtGox dump a myth? So according to the case put forward in this comprehensive Medium article written by someone called Crypto Medication, yes. Now if you're not up to speed on this story, go back and watch this video of mine from the 9th of March in which I talked about the bankruptcy attorney for the insolvent MtGox exchange dumping 30-odd thousand Bitcoin and preventing the Bitcoin price from recovering. Now back to the Medium article. This article debunks the theory that this fellow is depressing the price on the basis that A, the Bitcoin price had already been going down for several days before one of the alleged dumps on the 22nd of December. And B, the candle pattern that appeared when the dump was happening was actually a strong reversal signal and there was a lot of buyers coming into the market at the time. And C, the total market cap before and after the alleged dump was in a nice consistent downtrend. So the amount of Bitcoin that this attorney was dumping should have just got lost in the wide open sea, making very little difference. I actually mentioned this point in my original video. I questioned whether 30,000 Bitcoin sold over 5 months at an average of 226 Bitcoin per day would even be noticed. This Medium article is a lot more comprehensive than I've given it credit for. I've just picked out a couple of details from a much wider argument, which you may wish to dig into yourself if you want to get the full skinny on this. The bottom line though is that this article is good news because it's debunking the idea that the Bitcoin price is being artificially depressed and that we can't hope for a recovery anytime soon. Moving on to story number 4 for today. Trump signs executive order banning Venezuela's Petro cryptocurrency. What did I say when I covered the launch of the Petro white paper on this very channel? I said a certain United States was not going to be very happy at all about any perceived threat to the Petro dollar. So the Petro cryptocurrency is now effectively illegal in the United States. There's a first time for everything, and this is the first time the president has addressed a cryptocurrency directly. Now, the executive order is issued on the basis that Venezuela are attempting to circumvent US sanctions. Well, yeah. But it's not just the Petro specifically. Here in red it says, any digital currency, digital coin, digital token that was issued by, for, or on behalf of the government of Venezuela on or after January the 9th, 2018 are prohibited as of the effective date of this order. And while I'm pleased that the White House now has cryptocurrency squarely on their radar, I'm not so pleased that their first direct interaction with it was a contentious one. And let's round off today's show with a skip over the markets. Overall market cap continues to climb slowly but with regular pullbacks, now at about 326 billion, which is about where we were 2 days ago. According to onchaineffects.com, the biggest winners are Quantum up 43.59%, EOS up 31%, and also Status, which is up 29.3%. Interestingly enough, there are no losers in the top capped coins today. Charts wise, Bitcoin is still holding on to that 8,300 level. It keeps poking its head above it and then shaking its tail below it. So far, it has not made a decisive move. It has not made up its mind yet. Yes, we have come back up off that low of 72.40, but that 8,300 is acting like a magnet. Whichever side of it Bitcoin tries to go, it gets pulled back to it again. But you're probably like me. In order of preference, I like rising markets the best, sideways markets second best, and down markets are my least favorite. So if we at least stay stable at 8,300 for a couple more days, that's preferable to a further fall in prices, but it will also give everyone time for those emotions to rebalance. So thanks very much for joining me today, guys. If you liked this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if I said some stuff in today's episode that was technobabble or gobbledygook, then you may want to take one of my structured online courses. Go over to my website, cryptoversity.com, click on courses, and you can take any one of my step-by-step online courses so that going forward, the news and commentary will make a lot more sense. Alright guys, that is all for today. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.